Welcome back. For those of you who have been here all day or just having us in the background, I kind of like to think that it's a little bit almost like our own version of having the radio on. And for those of you who are just joining now, welcome to this session about financial services. Alexandra and the team and I discussed the industries that have both been buffeted and boosted by the pandemic, and it's clear finance is one of those. And it's not just the pandemic, but Brexit, the move towards a cashless society, increasing inequality, all of this is really, truly rocking and rolling. And as we all know, AI solutions contribute to both the top and bottom line for firms by powering nearly every function. And everyone from executives to the data scientists are involved with determining how much to invest, what are the most profitable use cases, what are the biggest challenges that have to be overcome, and no one is immune to having this discussion, which is why I am so glad that we're joined here today by a mix of experts in this space. So we have Harriet Rees, Head of Data Science at Starling Bank, Jackson Hull, the COO of Oak North, Mattia Florentini, Head of Machine Learning at Cambridge Quantum, and Anne Cairns, the Executive Vice Chair of Mastercard. And of course, all of you listening. And as it's been very clear from today and every other Tortoise session, you listening are the ones that really make these sessions. So make sure you add your thoughts in the chat, and I will randomly call on you to ask your, well, you're not allowed to ask your questions, to make your points and share your views as we go along. But let's start by getting a feel, getting to know the panelists we have. So we're going to start with Anne. And at Mastercard, you have this glorious sort of bird's eye view over the whole financial services landscape. It's been a really fascinating 2 years. What's shocked you the most?
Well, I think the massive change as we've actually gone into the COVID period, where we basically have seen such a dramatic shift from cash into digital payments. We're processing about 75 billion transactions in real time now. And of course, our artificial intelligence is scanning those transactions and detecting any fraud in them in real time. So it's just an enormous change.
Yeah, absolutely enormous. And Harriet, earlier this month, the FT wrote, Starling Bank has had a better crisis than most neobanks. I'm sure it hasn't actually felt like that for you internally, but tell me, why do you think that is?
Yeah, thanks, Tabitha. Well, I think really for all of us in the pandemic, we all had to step back and think about what we needed to do in that moment. Everything was so unexpected. It all happened so quickly. And for us, it was about working out what the most important needs of our customers were. Some of the strategic choices we'd made ahead of the pandemic, obviously not knowing the pandemic was coming, meant that we were well placed for some of the decisions that we took. But I'd say that the biggest decision, and probably one of the reasons for that success, was our decision to partake in the SME lending, government-backed lending, which allowed us to just stay really relevant for our customer base. And that's ultimately what customers needed in that moment. We were just really pleased that we were able to mobilize ourselves. We had the amazing engineering at Starling to deliver what was needed in record time for us.
Yeah, and from one neobank to another, Jackson, the first and still only profitable challenger bank. Tell me a little bit about your mission at Oak North.
Yeah, sure. Thank you, Tabitha. Oak North was founded to free what we call the missing middle in terms of the size of businesses that are out looking for commercial loans. It's all about funding businesses in your neighborhood, businesses that create jobs, businesses that grow local economies. And since its founding, Oak North Bank has lent about $5 billion, pounds, I should say, in the UK, created tens of thousands of jobs in that time. More recently, ergo about 2 years ago, to really accelerate and amplify that mission, we have also built and now offer a software suite called a Credit Intelligence Suite, modeled on the basics and fundamentals of good data science and machine learning technologies to provide better predictions about commercial loans. And we sell that and license that to global banks in the US, the Southeast Asia, and in Europe.
Yeah, it's really interesting. Not what you first see on the surface of OakNorth, so great to hear. Mattia, quantum and AI, a real double whammy of the two things that the UK government are obsessed with at the moment, thankfully. Tell me a little bit more about Cambridge Quantum, and also, as it's hot off the press, your merger with Honeywell.
Sure. Thank you, Tabitha. So Cambridge Quantum was founded out of startup incubator in Cambridge University in 2014. Since 2016, we really started our operation as a company that really was trying to bridge or let's say connect quantum computing, which is I think the most innovative and revolutionary type of computation that is becoming available to us, and probably, again, the most revolutionary of the century, with the state-of-the-art solution. And this has been the whole focus throughout. And machine learning plays a key role here, because machine learning is a field and say a discipline that contains a set of practical tools, but also theoretical concepts that can really connect quantum computing with things like, for example, fraud detection, right, which is something that for sure resonates with the topics that we will be discussing today. Our effort into pushing, let's say, from both ends, so focusing on the science of quantum computing and then on the practical aspect of implementing data science project, is probably what really then stuck with a company as big as Honeywell, which has been secretly building their own quantum computer for the past decade. And then they decided to actually spin out a quantum hardware company, merge it with Cambridge Quantum, with the view of then potentially going public in the next year.
Gosh, exciting. Well, good to have you with us. And what I wanted to do for this session is sort of split it in two. So we're going to talk about the opportunity, the technology, the really exciting things that that AI will enable us to do. And then we're going to talk about the challenges, the ethics, the regulation, the risks, and how we can mitigate them. And then we'll end with a sort of a future-looking view. So as people chime in on the right, we might jump around from that, but that's what my initial thinking is. So let's start with those opportunities. And what's some of the technology shifts and products that enables that you're most excited about?
Well, I already mentioned the fraud detection, Tabitha, and actually we estimated we saved about $20 billion so far with those tools, and that we actually create them and distribute them around banks. And the other thing I love is things like behavioral fraud technology. So if I pick up my telephone and make a payment, and then you pick it up after me and try to do one as well, our technology will detect you have completely different keystrokes to me in the way that you use things. You're younger, so I'm sort of holding my telephone miles away from my face, and you're probably sitting.
I didn't know that. What do you know? Who did Mastercard build that themselves, or is that with a partner?
We bought a company. That specialized in it. And the other thing that's very interesting about the algorithms of companies we bought, is that was New Data, and we bought another company called Brighterion, is that similar algorithms used to operate in the financial space can be used to actually match organs in your body. So, if you were somebody, let's hope not, that needed, say, a kidney transplant, then these algorithms would be able to go into the biomedical field and do that matching for you. Fantastic stuff, really. I love it, because I think all of this stuff is coming together talking about COVID now, everybody's kind of up the curve about, oh, well, here's the latest picture of the virus and this is what the scientists are doing. I mean, you just go out into the street and everybody's talking about medicine these days.
Yeah.
Exciting.
That's a good point. And more comfortable with the technologies that can help them to overcome these things. Jackson, how does Oak North work when you're thinking about a new innovation for a new client? Take me through sort of the process in improving business loans, for example.
Yeah, sure. I think importantly, it all starts with discovering and listening to our customers, right? So they know better than us what their problems are in the life cycle of a loan. So typically we engage very deeply with our customers, hear their needs, and then sort of channel that back into our product development life cycles here at Oak North. I think what we're hearing out in post-COVID now is a couple of things. One, maybe because the regulators are talking a lot about it, the establishment of what we call a forward-looking view of a portfolio, whereas really up until COVID and historically, banks look backward to evaluate how their portfolio is going to do going forward. They say, oh, it's performed really well up until now, it's got to perform really well going forward. I'm oversimplifying, of course. And you have to now, using data science and enriching your core data, the data that you capture with lots of different types of data, to provide a better forward-looking view, a forecast, and be able to say what happens if. So we're hearing lots about that. Now we're well situated at Oak North because that's the way we operate our bank, and also our software platform is built to do just that. And then the other thing that we're hearing from our customers, back to your question, is people are really starting to think about climate, and climate becoming really a big topic about risk and opportunity in commercial lending. How are my properties physically at risk? What about businesses that are operating in industries that are going to be transitioned as a part of climate change? So we're focused very intensely on again, listening to our customers and channeling that back and producing solutions that help banks better assess the risk in their portfolios and loans, new loans, new business to the bank.
Totally. And you in the first half of your question, you actually answered without knowing Rich's question around whether companies, whether you're purely using your own data or data from third parties. And you definitely said that you were aggregating other data. And so I want to ask you Rich's second part of his question. He said, if so, how do you verify the quality of data from third parties? And to touch on the point from the last talk, how do you ensure that the third parties are also gathering data ethically? I mean, we've skipped to the second section, but Rich's question is so poignant.
Yeah, Rich, it's a great question. Yeah, so interestingly, you use the data you acquire, you use data science to confirm its efficacy, right? And so we do lots of stuff. Some data we acquire commercially, some data we actually manufacture, and other data is available publicly that we stitch together. All of that data needs to be looked at over and over and over and over again. Kind of looks like a continuous test cycle in a way. Think about a pipeline of data, and we can say because of the efforts we've put into that pipeline that our data set is cleaner, better, less noise than any particular constituent data set. So that's the first part, is you can't just take it on face value, you got to work with it. And often that leads you back to a partner and you go, hey, Mr. Source, Mrs. Source, like what's up with this data, right? And they have to answer. The ethically sourced, that's a very interesting one. So the areas of that we get concerned about really are is the data unbiased from a commercial lending perspective, right? That's really what we're interested in making sure. In other words, it's not regionally slanted, right? Or it doesn't represent, a certain cross section of data that, is not the full picture, that sort of thing. I think it maybe stands in contrast a bit to maybe some consumer businesses that really have to importantly watch out for inherent bias in data sets for personal lending decisions, which we don't do. But we do have our own version of it, and it basically takes the form of making sure that you have a well-balanced data set by, importantly, testing it, looking backwards, testing your models, and making sure that they're predicting the way you think they should.
And I'm sure we'll come to this more, but that was a good answer to Rich's quick question. And let's come on to Harriet. I think Jackson nicely teed us up, as you're obviously majority consumer, but I know now also business. But how are you using AI across the bank?
Yeah, sure. I mean, we're a bank, so I'm sure I can name off lots of the obvious examples, some of which Anne and Jackson have already mentioned: lending, fraud. But the way in which we think we're a bit different to some other banks is obviously that we're all about the customer experience. We want banking to just be better, a better experience. So some of the cool stuff that we've done is actually very much front and focus in the app. We make customers' onboarding journeys very slick and smooth, and we do that using a variety of algorithms in the background. Sometimes it's those algorithms that you don't even know are the ones that are the best. You know, customers not really realizing all that smart stuff that's going on in the background. So yeah, a lot of computer vision, OCR, that sort of stuff going on in the background to extract relevant information from documents that customers are uploading, serving that information in real time to human agents who we still rely on to make key decisions as part of that flow. And then using that information and the decisions of our agents to come to final decisions. So that's been some of the really cool stuff that I think is maybe a little different from others in the banking space. And actually another really good example of something that we did in the COVID times, as that's something you mentioned at the beginning, Tabitha, we launched a check imaging product. And that was one that we launched because actually up until that point, customers had to physically post a check or go to a post office. And we said, you know what, in the COVID times, nobody wants to be doing that. We want it all to be digital. So we sort of sped up the delivery of that one, which again, it uses a lot of CV and OCR tech to allow customers to make those payments purely digitally.
Helps me with my granny's check at Christmas. So thank you.
Exactly.
You only get one a year, right?
So yeah, we really just look for opportunities to just make potentially painful or slow or arduous processes for customers smoother, because we think that that's a way that customers remain, you know, really engaged with the product and see us as really different to other offerings. I think the topic that the question that Rich just asked is a really interesting one, and I'm happy to kind of weigh in on that one. Because I think it has so many wider implications, not just the data that you ingest from other sources, but also where you're ingesting model decisions. You know, how does one get comfort around all of the methods that have been used by third parties, whether it's the data gathering, the data engineering and transformation, or the statistical methods that they've used. And sometimes it's difficult to really work out where the balance is between commercially what people want to share and then ethically what we really need to know that we are comfortable with the way that those decisions have been made. So yeah, this is something that I've talked about at length with some of my peers on the public-private forum with the FCA and the Bank of England, who are really trying to think about some of these topics. You know, how can we encourage people to really challenge and question methods and approaches, but also, you know, make it commercially viable for people to operate in this space. And I think there's quite a lot in terms of research and innovation that's been going on around methods that we can use, fairness and things like this, that actually are tool sets that people can now rely on to give themselves the confidence that the methods and approaches are sensible.
Sorry, you go ahead.
Well, I was going to say, I think we now live in a world actually where customers are that much more informed than they've ever been before with regards to the risks. And, you know, I often reference this when I talk on this topic. A few years ago, you know, we'd see an advert on a social media platform for something, and we wouldn't really question it. We just think, there it is, I've seen that advert. Nowadays, you see the advert and you think, why am I being shown that advert? On what basis is that what I'm being shown? What have I clicked? What have I seen? What have I been exposed to that's led to this happening? People really questioning decisions in the background. And I think that, you know, we really feel that our customers are very informed on this topic and therefore expect us to have the answers when they ask us these questions. How did you make this decision? On what basis? What data have you used? And so we spend a lot of time, you know, thinking about this topic and making sure that we are prepared for those questions from customers when they arrive.
Yeah. And now, you know, with GDPR, they have a right to an explanation. So yeah, we're definitely, it was wrong of me to think we could split the session into the opportunities and the ethical considerations separately. So we'll keep weaving them in. Mattia, you're using AI in, as I understand it, sort of trading, financial services, forecasting. Tell me a little bit more about how quantum really disrupts that whole world.
Absolutely, yes. You know, our approach is based on focusing on the research really fostering a deeper understanding of how to bring a quantum advantage in more commercial domain. And then in parallel, we have data science teams that build the product today with the state of the art of what's around. And this is what we started doing with specifically in trading. You know, the domain on financial financial trading of the trading that happen into electronic exchange benefits from a number of computational techniques that, first of all, really are at their best when there is a machine learning element to it. We've mentioned the importance of forecasting and how machine learning, and in our case, especially deep learning, can bring to forecasting. In our case, we are using very unstructured financial time series data. And with unstructured data, we know that deep learning, so neural networks, are particularly good at handling the data. But also there are other sub-problems, such as hard combinatorial optimization problem, where traditional computer algorithms, they are not well suited at doing. Machine learning can bring an advantage, but really the research for the past few decades has focused on really creativity. So let's build new algorithms that don't guarantee finding the best solution, but within a limited computational budget, they lead us something that is of high quality. Especially in the optimization case, it turns out that this is one of the disciplines that can benefit from quantum computation early on, because with quantum computers now, they exist, but they're still limited machine. And this whole concept of building models that first and foremost are limited in the computational budget, in the resources, in the amount of electricity, for example, that are allowed to consume. And then, you will try with data. We will try with again, many tools borrowed from the deep learning toolbox to drive them towards the right solution. Is a winning paradigm. So in this trading product, we have been able to really push, try to get the best we can by employing things like deep learning, which are state of the art, and then build ancillary toolboxes, as the one for optimization and risk management, that have dual purposes, and they can be enabled with a quantum piece for various stakeholders, such as banks or other buy-side firms, to start dipping their toes with quantum computation. Again, quantum computation is really exciting. The prospects are really exciting for it, but it's still in a proof of concept phase.
And what level of automation are we talking? How much, once you've sort of put quantum into the process, are you able to have end-to-end automation where the machine is then making the decision, or do you still have a human in the loop when it comes to the products that you're building?
Yeah, no, this is an excellent point. Through machine learning, one can automate the entire process of trading and risk management in real time. Quantum can add a little bit of icing on the cake at this stage, because what you can do with quantum is try to, let's say, duplicate some part of this pipeline and try to explore how this new technology can solve problems that we know that classical computers are not able to solve. I mentioned the one optimization, but another one is the one of explainability in artificial intelligence. So, we know that there are powerful models, such as probabilistic graphical models, that are very useful in expertise system, for question answering system, troubleshooting, triage. Those are, again, very complex computational system. Classical computer really struggle managing this. also because the nature of this project is inherently stepwise. So we go from this one decision to another, from a yes or no possibility to another.
Right.
Also, classical machine, they struggle with the probabilistic concept of it. Probability is not something that comes natural to classical computer, which has its pros and cons. The pros is that when, for example, banks have to do value adjustment calculation to make sure that their balance sheet is strong enough to withstand the next crisis, they do Monte Carlo calculation to do that, and they can provide the result of their calculation to the regulator. And yeah, that's probabilistic, but you can run the same experiment twice and you will get the same result. A quantum computer instead can handle those problems more naturally. A quantum computer, basically, when you program a quantum computer, you're programming its probability distribution towards potential outcome. But it's impossible to get the same, let's say, set of random trial twice. So this is something that probably regulator will still have to figure out a way of making, of understanding how things can be done in a way that is for them reliable enough.
Yeah, makes sense. I've got a lot more to learn on it though. I want to come to Jackson and Harriet and talk about human in the loop in a moment, but Alexandra, you've got your hand up. You must, I'd love to hear your point.
I'm going to break our own rule for a second, which is asking a question. Mattia, thank you. It's so interesting to see that quantum on the horizon, what it has the potential to do, and the sort of the things that regulators have to grapple with quantum compute on the horizon. Actually, my question was to Jackson and to Anne, because Jackson, we spoke the other day about sort of the range, where you're looking at the range of adoption. So you've got your HSBCs and your Morgan Stanleys and Mastercards, and then you've got other setups. And you said there's quite a big difference from the AI penetration, if you will, or sort of the absorption of AI in banks, depending on sort of what type of banks they are. And I just thought it'd be really, really good to hear that point again, as in where you think, because we're spending a lot of time looking at adoption and sort of where of AI, and in financial services, it seems to be the most mature sector, and yet there's a long way to go. And I think we sort of touched on it, but I think if you could give us again that sort of, where is it where you can say it's 50% where, and within the financial services, where sort of mainly 10%. And the reason I'm asking that is because we're trying to get a sense of where the barriers are to adoption, and what even within one sector, what that looks like, and the differentiation within that sector. So yeah, if I could hear you, Jackson, then I'd love to hear your thoughts, Anne, on that point.
Question.
Oh, I have one more question before you start, Jackson, sorry. And that is, how are you preparing for quantum out there? There's on the horizon. Is there sort of preparations that one needs to make from a regulatory perspective, from a pipeline and plumbing perspective? A lot of people in the cyber community are saying, look, our systems, quantum can disrupt cyber in many respects because it can sort of tangle all of the encryption, but many argue that they're actually already preparing for that and sort of building that into cyber security systems. So I'm just wondering if the same applies for banks, although it's a sort of a different idea, of course.
Sure. Cool. Yeah, happy to answer both. I think the first question is very difficult to answer because financial services is so broad, but I'll try. So I think if you think about maybe separated into personal finance offerings, banking offerings, and then you have the land of the commercial lending space. You got a relatively good adoption and fairly mature ML or AI penetration in those services. We already heard from Harriet, about like a litany of things that are done at Starling. It's awesome. I think, and the fraud detection space has been quite robust for a long time, right? And before it was ML, it was big data, and in bygone eras it would have been rules. So I think like that there's a really good maturity, I think, in certain areas of financial services. But if you come to commercial lending, which is our space, that spectrum we were talking about was really about the commercial bank within these larger banks, because if they have a trading desk, they've been using, their quants have been developing through data science and statistical models, lots of cool stuff, for decades, right? But the commercial teams, not for lack of sophistication, but because they just haven't embraced or been able to embrace AI or ML in their decision-making processes. And what we see is banks large and small, it doesn't really depend on their size. Somewhere in the commercial bank's history, they started, a broader digital transformation. And that has, led them down a path of getting, a grasp on what is their data. Maybe they've built data warehouses, maybe they've put some analysis tools on top of it and are able to start using that tooling to answer questions. And it kind of depends on where they are in that spectrum, whether they can actually pick up and adopt then as a part of their commercial lending lifecycle, any AI, or data-driven modeling, right? And that's really what we see. And we see some that are quite sophisticated and have been able to, for almost every single loan, apply some lens of data science or machine learning. But the vast majority are somewhere, not quite there. And I think it's sort of important for us because it indicates to us that there's a really important need there that's not yet been fulfilled. So I guess back to just kind of zoom out, financial services is very broad. Commercial lending is probably lagging in its adoption of AI relative to broader financial services and consumer services in particular. Right. I'll quickly answer the quantum question because I'm just gonna I'll probably eat these words in 9 years, but for us, quantum computing is like a 2030 problem. So we're just not choosing to address it at the moment. So again, I may eat those words, and
that's why you're the profitable bank.
Matcha, you may come back and feed me those words, at some stage soon. But.
And how would you like to tackle Alexandra's question in any order?
Well, look, I actually agree with Jackson's synopsis about how banks are using the AI today. It's interesting because a lot of discussion revolves initially around automation, and the World Economic Forum have just published some findings saying that for the companies they're talking to today, the tasks that are performed by human beings will be 50% performed by machines by 2025 and 50% by human beings, which is actually quite a big shift. It isn't artificial intelligence, but it's the first step that you start to take. And if that is true, that's a massive shift in what people do in their day job. And so all the sort of mundane things that would be happening in a bank, one would assume would be 50% done by machines, according to that. Of course, then that frees up humans to be more creative. And I think with that creativity, going to the quantum computing question, it's not just quantum computing, but it's things like the advent of 5G. We know that 5G is rolling out around the world. We know that it's unevenly distributed. You've got the US, South Korea, Japan that are sort of going to be far ahead of everyone else. But it will be coming. And then the speed at which we can crunch data will be so fantastic. It will make things like driverless cars much more of a, from a concept to a reality, if you like, because of that. It's the combination that will actually make the difference. And I think, in the 2G age, we couldn't even imagine what social networking was like. Now we're in the 3 and 4G age. We're doing it like ad infinitum, right? Yeah. In the 5G age, I think we'll see completely new products and services. And I think going to Harriet's point, she is in a digital bank. And so, they have gone right to the front end in terms of the customer experience, and things like the recommender systems that we all suffer with in Netflix. I do, because my husband constantly watches Narcos. And so every time I switch on Netflix, I get the next version of, oh God, we've moved from Colombia to Mexico now, That's my recommender program. But, I think it's absolutely fantastic when applied to banks, as long as you're being transparent and you've built that customer trust and they know you're doing it.
Yeah, I'd love to come back to your point, Anne, about 50% of the work being done by machines. And Harriet, you mentioned how you have, your agents are being supported by the AI. How do you train and support those agents to work with autonomous machines rather than just whether it was clunky or not, the old way of working? And how do you keep that spirit alive and ensure that, as Anne said, hopefully it frees them up to do more creative things versus making them, unemployed?
Sure, and this is a really important point, because when we talk about the customer experience, I think everyone thinks I'm talking about just what's in the app, but actually I'm really not. I'm talking about even what's going on at Starling HQ, and actually the way that our agents are interacting with clients' accounts, the way that we serve them information, the way that we do that in real time to make sure they've got access to everything that they need in the moment. And actually, you're right, training people to understand, people who haven't built and developed models and maybe aren't statisticians, to understand what a model is saying and what inputs it had and how it then used that information was really key to this. So we've done a lot of work on explainable AI, and we really take care in terms of what algorithms we use for what purposes, and make sure that we are able to give that explanation that you said, customers have a right to, but we actually think the agents have a need for, so that if they're asked by a customer, why is this happening, they have all of the information that they need in front of them to give the customer the explanation that they deserve. And that's obviously part down to the work of the data scientists and the work that we do on explainable AI and methods, but then also, in how we serve that information in our sort of UI, our internal UI to our agents, so that they've got that information. And we really think that human in the loop step is still essential, actually, for many of these decisions. We think that customers get a lot of comfort from that. And we feel that for especially, the decisions that we're talking about here with regards to lending and fraud, we think that human involvement in those decisions is still really necessary to give us the comfort that we need. And also we're able to learn from that and that kind of hybrid interaction between models and humans.
Yeah, it's so interesting. And if you don't mind, let's extrapolate out a little bit and include Kim's question. So Kim asked, when it comes to consumer lending, how is AI being incorporated? To what extent are lenders running AI over people's transactions? And is AI looking at someone's transactions? What factors does it pull in or pull out as being most important? So Kim is asking you the kind of question I imagine some of your agents might get asked.
Yeah, absolutely. And this comes down to, as I say, some of the methods that we use to explain decisions. The data scientists on the call will probably be familiar with SHAP values, this sort of thing, really breaking it down into the weights of different factors in the decision that we finally come to. But in terms of what factors does it pull out, I mean, it's what factors do you give it to work with, right? We're not yet in a world where I can just throw anything at a model and it will do something and come out with a perfectly curated list of explainable factors. There's still a lot of work, a lot of data wrangling, we call it, that goes on to feed models features that make sense and that we understand the basis for, the intuition and the basis for. So very much the factors that it will pull out as being most important are factors that we've already, intuitively suggested that this model should be using for this decision. We often look at all the data we've got available and think to ourselves, just because we've got this data, should we use this data for this decision? I think that's also a really important question that AI practitioners should ask themselves. As you say, running AI over people's transactions, I think that's a bit of a commercial question, but also an ethics question as to whether we think that should just be a free for all, or whether we think there should be some ethical considerations there too.
And what did you decide?
Well, I think for different purposes, we could come to different conclusions, right? But I think it's really important that we don't just use all data that's available for any use case, and that actually we really consider what the implications could be.
I love Kim's point here, but apparently people who get takeaways, is that true, Anne?
Well, Sorry.
Oh, I thought you had read Kim's point as well. That people who get takeaways end up being less likely to make their payments. I thought, of all people, Anne might know, you've got the like finger on the button.
You know, what I was going to say to Harriet's point is that I think that, you know, you should ask your consumer. The consumer ultimately should have control of their own data and control of their own privacy. And they should give the bank consent to, you know, if they want to have a loan, they should give the bank consent to look at their transactions. I think that's the right way forward. So I think it's rather a simple ethical question, if you like. But the other thing is that, you know, some early data showed us up in Sweden that that women were getting less loans through the algorithms they introduced in AI than they were from just your bank manager, because the bank manager knew them since they were a kid and was assessing them as a person. So this idea of having a human in the loop is actually quite an interesting thing. And of course, this then actually raises the question of bias. You know, is there some sort of bias in the algorithm that says, "Ooh, hang on a minute, here's a woman. She's just asked for a bank loan." Women traditionally get much lower bank loans than men. They have much less bank accounts. And we did a study of fintechs recently at the Financial Alliance for Women group. And what we found was that the neobanks, the digital banks, were even worse than the traditional banks. The gender gap was something like 27.6% in terms of gap between a woman having a bank account and a man having a bank account in the digital sector, whereas it's about 8 to 9% in the traditional sector. So this is something that's really got to be addressed. And I actually think that one of the reasons is we just don't have enough women programming algorithms, designing things, thinking about the she economy, developing products for women, and we have to do that because they're half the human race.
Yeah, thank God for Anne Boleyn and Harriet Rees. Huh? And on to Jackson. So Jackson, we spoke a lot about how you also have this human in the loop model. I think you call it sort of human touch. I'd love to hear a little bit more about how you see this playing out.
Yeah, we have the same explainability challenge, but really from a different perspective. So rather than an ethical question, it's more about adoption. So we sell to very technical users. So if you think about a credit analyst, maybe they've been a credit analyst for decades, right? They're quite analytical. They use data, they use tooling, they use statistics to, you know, they may do that offline in Excel, but they use it. So there's a credibility question as well. And you know, the human in the loop for us is we employ a good number of subject matter experts who are credit people, career-long credit folks, who help us not just develop the experience and the solutions around what's the life cycle of a loan from a credit perspective, but they also help us train models, for example. So it's a huge asset to us to accelerate the development of our models. If we sat around and waited for all of the data in commercial lending, which is a relatively deep but slim vertical, we might be here for 100 years till the corpus grows large enough, right, to be able to have an effective model. So whether that's looking at you know, a confusion matrix around you know, classification of similar companies or something, you know, it's great. We have human eyes that can say I know the domain. I can speak for the art side of the art and science of credit analysis and underwriting. And it's like a huge asset. The other thing I would just add here is it's very interesting because in our space, lots of the AI or ML technology we use, OCR for financial statements, you know, some of the you know, k-mean similarity that we run across you know, companies of sizes in different regions, that kind of stuff. Like that stuff is never hard to get adoption for. Really, in our space, they care a lot about why is that curve shaped like that.
Yes.
Why did you draw that curve in that way? What are the constituent factors that led to that prediction? And again,
they normally have more control to change it than a consumer would.
Definitely, and again, it's not that it's a less important question for our users, but it's not necessarily an ethical question. It's more about what built up your model, right? What went in? What were the key features in the data set that contributed to that shape of the curve? And actually, importantly, when you're selling software, that's important to be able to explain. And also, like, that is part and parcel of the solution we have to build. So like Harriet building that in a training and surfacing, at the point of use, we do the same thing in our product. We try to, within the limits of actually being able to, demonstrate what are the key features in the data underpinning a prediction, a curve that's being drawn about the performance of a company looking forward.
Yeah, and we should come to Mattia next. Mattia, I have two questions for you. So one, I want to know about the ethical considerations that you face, but two, I'm going to ask David Wood's question because he's asked some very specific quantum questions, and I think it would be silly not to get them answered. So I'm going to start with them, and then we're going to hear a little bit more about the ethical considerations. But what David's asked, because he'd like to help assess the potential date when quantum computing systems will actually disrupt financial services. So he's playing off Jackson's 2030. He wants to know how many qubits does Cambridge quantum system presently have, and how many it will have in 2 years' time? And how many do you expect it will need before it moves into practical usage?
Yeah, not
and you could tell us what a qubit is at the same time.
Help me. So a qubit is how you measure basically the capacity, right, of a quantum computer right now. Okay. In fact, is a memory.
Like compute.
Yeah, exactly. It's a measure of memory. So qubits and bits are they both measure computer memory.
Got it.
At the moment, let's say the merger entity from Cambridge Quantum and Honeywell Quantum Solution is called now I need to pronounce it correctly, otherwise they will tell me off. It's called Quantinuum.
Okay.
Right. And it's a play with quantum and continuum. Right. Okay. So from Honeywell Quantum Solution, we inherited some very powerful machine that has 12 qubits. It's not the largest on the market, but it's the qubits are very, very high quality. Given that the amount of things that you can do with 120 qubits, which is what IBM has, and 12 qubits, they're qualitatively kind of the same. I think that quality here is a factor that oversides, it's quite exciting, let's say, for people like me that mostly work on software. So, 12 is the current number. There are expectations, and let's say I know that in the lab there are probably a couple of hundred people really working hard to increasing that number. And I think that the expectation then in a couple of years' time we will be at around 40.
Yeah.
And 40 is a good number because we start to be on the verge of things that a classical computer really cannot do. Not quite, but 40, 50, it becomes 40 is something that a laptop, commodity hardware is beyond that. Now he was asking about where we need to go, and
the ethical considerations next.
Yeah, the ethical consideration is next. So, no, sorry, I wanted to.
Oh, I see. His last question.
Yeah, his last question was about, let's say,
how many does Matthew expect it to need in order for practical application? Yeah.
Yeah, this is a tough question, right? This is a tough question because
I need to press you for a short answer.
Okay, yeah. I think that a few hundreds is
okay. So you're halfway there.
Is in my guess. So we could be close, but the race is both from the point of view of the hardware. We need improvement both from the hardware and the software front, right? So that's the key point. So to understanding why I gave this number. Okay, the ethical consideration. This is interesting. I think that people made many points about quantum and ethical. Maybe the one that stuck out to me the most is the fact that if quantum computing is so powerful, and how are we ensuring that this doesn't this technology is not treated or is not developed by government as a kind of super weapon, right? Maybe with quantum computer we will have actually through AI, because we know that what really enabled strong machine learning is more computer power. But generally speaking, if these things is going to be so transformative, how we make sure we make this, we give the possibility of, we plan for this technology to benefit everyone. This is probably, I think, the most pressing consideration. And for example, like at Quantinuum, we foresee.
I'm going to hurry you to answer that last piece because I'm going to come to everyone else for a second.
Okay, sure. I think that government can act, but also company can act. I think there are companies that every quantum computing company is looking for funding right now for support. Long-term plan. A certain company, including Quantinuum, a main statement about the people who want to work with in the future and how to want to spend the money in ethical ways. So with open quantum software and by working with partners that want to think how to do good with quantum.
Yeah, thank you. And that leaves me to ask each of you, you've got a minute each, or less even if you'd like, 30 seconds to tell me what you think the future looks like for financial services in the next 5 to 10 years. So not the next 5 years, but more like 5, 6, 7, 8, 9, 10 years. We'll come to Jackson, then Harriet, then Anne. And it can be your hope as well, rather than it doesn't have to be your prediction.
Yeah, I guess look, my hope is that parts of our mission and more are fulfilled. And I think that's democratizing commercial lending, getting money back where it deserves to be, into the hands of entrepreneurs who have growing businesses that are making a difference. And I think what's going to enable that and what's exciting is not just ML and harnessing the power of lots of data, but also elements of transparent commerce like the blockchain. And I do think in the decade ahead, we'll start to see some quite meaty business models and use cases emerge around blockchain and AI, of course.
Here. Harriet, what are your hopes for the next 5 to 10 years?
My hope would definitely be that we mobilize all customers of consumer and SME banks to demand better experiences from their banks. I think that this is the force that we really need. We need customers screaming out for better experiences, better products, better features. And in this way, I think we could even see more innovation at greater pace than we've seen in the last 5 years, which feels crazy, but wouldn't it be wonderful?
I completely agree. Get the consumer to want more from us. Anne, what's your hopes? I think someone's muted you.
Yeah.
There you are, you're back. Oh, no, they've muted you again. Sorry. You're back. Are you back? No. Okay. Yes, I can hear you.
The whole landscape is going to change dramatically because open banking is taking off around the world. And so we're going to see this integration of banks and technology companies coming together to give better consumer access, control over their own data. I would love to see an unbiased world in the future. Tabitha, you've helped develop the AI roadmap for Britain, and you know that we need to think about education at the start of that cycle so that we can bring, a really fresh look into the financial sector through well-educated people who understand AI coming from every background, every gender.
Let's get AI into the curriculum. Yay. Thank you all so much. What a super session. As Luke said, even Luke, who does these all the time, says he's heard so many things today that he had absolutely no idea prior to this session. So I feel like we can give ourselves a pat on the back. Thank you very much, Jackson, Mattia, and Harriet. See you all very soon. And I believe in 7 minutes, you're going to have the luxury of hearing James Harding talking to Stuart Russell and Helen Margetts. Quite a seminal moment. I'm sticking around for that. I'll be asking some questions. So I'll see you all then.